you, Mr. Chairman. I just want to agree with Mr. Camp and really with some of the observations you made earlier, Mr. Barthold, with respect to the need to consider corporate tax in conjunction with the individual tax side, given the increasing use of pass-through entities, so that we can make sure we understand the interrelationship between those things. Looking at the corporate side, because I think there's consensus that at the top rate, 35%, as has been said, is it's obviously higher than a lot of our competitors, much higher. Effective rates aren't necessarily all higher, but just so that we know where we're heading here in terms of the revenue and deficit impact that we have to make up if we want to do this in a revenue neutral way. Is there a rough rule of thumb as to what it would cost in terms of lost revenue for every percent, reduction from, say, the 35% rate? I've heard a rough rule of thumb about $100 billion a year.
I'll have to check that for you, Mr. Van Hollen. We did a calculation like that in the past couple of years, but the enactment of expensing, which sort of changes a lot of the business cash flow over the 10-year period over which we've measured this, changes that calculation a bit. So I will get a new calculation.
Yeah, it'd be helpful for us just as we sort through this, because if we wanted to do this, within, say, the corporate tax code, we'd have to look at which tax expenditures we thought we should prune or eliminate in the process. Okay. Let me just circle back to a question that has been asked of you in different ways, but with respect to scoring, and you mentioned the House rules, and I've looked at some of the analyses that you have done with respect to taking into account the GDP effects, and as I understand your analyses, one of the reasons you might be reluctant to include a set rule within the score is that they take into many different factors in the economy. What decisions the Fed makes, whether or not deficits, the cost of the tax cut is offset. I mean, is that one reason why it's complicated? It complicates being able to have a hard and fast rule on this.
There's uncertainty, and the analysis that we've provided to the Ways and Means Committee is just reflective of the uncertainty. Right. One of the points that you made, the uncertainty can arise from when you're dealing with changes in tax policy, changes in expenditure policy, you're dealing with fiscal, what economists call fiscal policy, and there's then always the uncertainty of, well, if Congress takes one path of fiscal policy, what is the Fed's monetary policy? Do they accommodate that fully, or do they partially offset that? That affects the macroeconomic outcomes.
Thank you, Mr. Chairman.
Dr. Barthold, before you begin your next testimony,